As of 10:37 a.m. Eastern Time, the market is open and trading is active. Datavault IC, trading under the ticker DVLT, is currently priced at $1.55 per share. This reflects an intraday move of down $0.01 or 0.64%. That price, $1.55, is almost a placeholder. It's a snapshot of a stock that is in the middle of a fundamental tug of war, and the price you see now is not nearly as important as the narrative that is being rewritten, seemingly by the hour. The expectation for a stock like this, a low-priced name with AI in its title, is usually one of speculative hype, a lot of buzzwords, and very little substance. It's the kind of stock people might look for on Robinhood or SoFi Invest, hoping for a quick 100% pop. The immediate assumption is that it's a high-risk gamble, and frankly, recent headlines would only confirm that bias. But the reality of what is happening under the hood at this company is far more complex and structured than most believe. The common belief is that it's just another volatile microcap, but the filings and strategic announcements paint a picture of something far, far larger and potentially far more structured than a simple speculative play. Let's start with the headline that has dominated the conversation in the last 24 hours. Datavault IAC's board has approved a property dividend in the form of Dream Bold Draft meme coins. One coin will be distributed for every share of DVLT common stock held. This is, to put it mildly, an unconventional move. It immediately brings a circus-like atmosphere to the stock, attracting a specific kind of trader, while likely causing many traditional investors, perhaps those using Fidelity Wealth Management or automated Schwab intelligent portfolios, to roll their eyes and stay away. This move seems to confirm the expectation entirely that this is a company using gimmicks to generate retail interest and create a spike. It feels like a move designed to get noticed, and it's working. The stock has been incredibly volatile, with a 52-week range that spans from just $0.25 to $4.10. That's not the kind of trading you see in Apple stock or even the more volatile Tesla stock. This is a different class of asset altogether. But here is the reality, and it's the part that is creating such a violent disconnect. While the market is distracted by the meme coin, they seem to be ignoring the press release that came out yesterday, which is, by any measure, one of the most aggressive financial projections I have seen in a long time. The company, which reported revenues of $2.7 million in 2024, just issued forward-looking guidance for its 2025 revenue to be in the range of $30 million to $60 million. More staggering, it is projecting 2026 revenue to exceed $200 million. This isn't a small adjustment. This is a claim that the company's revenue is set to multiply by a factor of nearly 75-fold in 2 years. The tension, therefore, isn't about a meme coin. The real story is whether this guidance is a financial fantasy or the first credible sign of a massive exponential ramp-up. So where is this $200 million supposed to come from? It's not from their legacy business, the Acoustic Science Division, which holds patents for wireless audio transmission. The projection is based entirely on their Data Science Division, and specifically its push into real-world asset, or RWA, tokenization. Yesterday, the company announced it is currently in dozens of contract negotiations with governments and private corporations worldwide to license its patented technology to tokenize potentially trillions of dollars in assets. We are talking about gold, silver, rare earth metals, carbon credits, and agricultural commodities. The company claims it has the dominant intellectual property required for any entity entering the RWA tokenization business, essentially positioning themselves as the gatekeeper. This is the core of the bull thesis. They are not just participating in the Web 3.0 space, they are claiming to be building the highway and the toll booths for it. This narrative is further complicated and supported by their other strategic moves. The company recently announced a major partnership with IBM. Datavault AI is building its 3 flagship AI agents, Datavault Bank, DataScore, and DataValue using IBM's watsonx AI platform. This isn't a small-time move. Aligning with a legacy tech giant like IBM lends a significant amount of credit to their operations. It suggests that their technology is, at the very least, real enough for IBM to co-brand and collaborate on. This partnership is designed to scale their platform globally, helping organizations convert their internal data into structured, tradable assets. This is the how that supports the $200 million guidance. The expectation is a small-cap gimmick. The reality is a company signing deals with IBM and Scilex Holdings. Yes, Scilex. This is the other critical piece of the puzzle. The company isn't just surviving on its own. It recently secured a $150 million strategic investment agreement from Scilex Holdings, which is currently pending shareholder approval. As part of this, Datavault granted Scilex an exclusive $10 million license to create a biotech exchange for tokenizing genomic and therapeutic data, a deal that comes with potential milestone payments of up to $2.55 billion. This $150 million investment isn't just a vote of confidence, it's a financial lifeline. Looking at the company's recent financials, it's a necessary one. This brings us to the bearish reality that balances the hype. While Datavault AI reported a 467% year-over-year revenue increase in its last quarter, Q2 2025, the actual number was still a very small $1.7 million. During that same period, the company posted a net loss of over $37 million. Their trailing 12-month operating cash flow is deeply negative. They are burning cash at a significant rate. This $150 million from Scilex isn't just growth capital, it's survival capital. It's what they need to bridge the gap from their current state to the projected $200 million revenue future. If that Scilex deal fails to get approved, or if the RWA contracts don't materialize as quickly as projected, the company's financial position becomes incredibly precarious. The meme coin dividend in this light could be seen as a way to keep shareholders engaged and supportive while the company finalizes this critical funding. This is what makes DVLT a fascinating case study in modern market mechanics. On one hand, you have a story that is perfectly tailored for a new generation of online investing. It's got AI, it's got Web 3.0, it's got tokenization, and now it has a meme coin dividend. It's a stock that is tailor-made for discussion on social media and trading on platforms like Robinhood or Fidelity's mobile app. This is not the kind of stock that someone looking for investment help or an intelligent portfolio would be steered toward. This is the definition of self-investing in a high-risk asset. Traders using more sophisticated platforms like interactive brokers are likely watching the extreme volume, which has been massive, trading 2.4 million shares in the first hour of the day alone, and looking for opportunities in the volatility. On the other hand, the company is making moves that suggest a serious enterprise, partnering with IBM, signing a multi-billion-dollar potential licensing and investment deal with a biotech holding company, and issuing highly specific, aggressive revenue guidance based on a new and plausible business model, RWA tokenization, is not the behavior of a simple pump-and-dump scheme. The company is also actively defending itself, having filed a lawsuit against the short seller Wolfpack Research, alleging false and misleading statements. This is a company fighting to prove its legitimacy. So how do we trade this? How do we even analyze it? You can't use the same metrics you'd use for NVIDIA stock. NVIDIA stock's value is based on tangible, massive earnings from selling chips. DVLT's value is based almost entirely on the market's belief in its 2026 revenue projections. This is a binary bet on the execution of its management and the validity of its RWA tokenization patents. Speaking of that meme coin, I have to ask, comment below if you think this Dreambowl dividend is a brilliant marketing move to attract a new class of investor or a desperate gimmick from a cash-burning company. Looking forward, the catalysts are clear. The first is the ex-dividend date for that meme coin, which is set for November 24th, 2025. You can expect a surge in trading and volatility as that date approaches. The second, and far more important, is the shareholder vote on the $150 million Scilex investment. The result of that vote is critical. Third, we need to see the dozens of negotiations turn into actual signed contracts for RWA tokenization. The company has set the expectation at $200 million. Now it has to prove it. The risks are equally clear. The Scilex deal could fall through. The RWA market could be slower to adopt than they believe. Their patents might not be as ironclad as they claim. And of course, they could simply run out of cash before the revenue ramp truly begins. In the end, we are left with a perfect example of the market's expectation versus reality framework. The expectation is a sub-$2 AI meme stock, a piece of speculative fluff. The reality is a high-burn, high-potential company attempting to pivot into a multi-trillion-dollar market backed by a major partnership with IBM and a critical, though pending, 9-figure investment. The meme coin is the noise. The $200 million projection is the signal.